Hi everyone, my name is Rohit Gurung and I'm going to talk about adjusting entries. Adjusting entries are made to update the accounts in an accounting system. Some accounts are not up to date, hence requiring adjustments to get them to their correct balances. But when do we need it? Adjusting entries are prepared at the end of an accounting period for accrual of income, accrual of expenses, deferrals, prepayments, depreciation, and allowances. Thus, adjusting entry for each of them is required. Today in this video, I'm going to talk about adjusting entries for unearned revenue. Unearned revenue, also known as deferred revenue or deferred income, represents revenue already been collected but not earned yet. It is considered as liability. But why? Following the accrual concept, income is recognized only when earned irrespective of when it was collected. Thus, at the end of an accounting period, deferred revenue must be checked and adjusted if needed. Recording unearned revenue, there are two different methods. One is liability method and the other one is income method. Under the liability method, when the amount is collected, a liability account is recorded such as unearned revenue. Whereas in income method, the entire collection of amounts are recorded under income account. Suppose on July 29, 2018, Company A made a collection of $2,000 in advance from its customers for their services. So the journal entry would be $2,000 of cash being debited and $2,000 of unearned revenue being credited. Now, what if at the end of the month, 40% of the unearned revenue has been rendered? Adjusting entry is needed in this situation for sure. Under the liability method, the entry would be $800 of unearned revenue being debited and $800 of service income being credited. $800 represents the 40% of $2,000 and represents the services that has been provided already. Whereas in income method, we look at how much of service is left. So 60% of $2,000 would be $1,200. That is the remaining balance of service income. Thus, $1,200 of service income is debited while $1,200 of unearned income is credited, thus adjusting the entry. Thank you very much for listening. Have a good day.